Hello investors, traders, and Market Club members everywhere. Adam Hewison here, co-founder of Market Club with your market update for Wednesday, the 5th of January. Well, it's been quite a year, quite a month, and Ukraine or no Ukraine, are stocks at a tipping point? That's today's question. We'll be looking at the major indices plus crude oil, energy, and also precious metals. So let's get started right away. The chart we're looking at on the screen is a chart of the Dow. And what's interesting on the Dow is the fact this is the only index that we still have a negative monthly triangle on, indicating that the trend longer term, according to the trade triangles, is on the wane. Now, the key thing here is also you have a weekly and a daily up green triangle. That's not the most important thing, however. The important thing is the longer term monthly, and that's red for negative. And also, if one looks at the RSI, which is a pretty good indicator, you can see that it's really beginning to, it's sort of trapped in the middle here. It's not, really going anywhere. Watch this 50 line. If it go below 50, then we'll see a lot more pressure on the downside. Plus, if we see this triangle turn red and go down, we're going to see a lot more pressure on the Dow, which for some reason has not gone up and made new highs over the previous highs here. So that's very important to remember. So let's watch the Dow as the first potential tipping point. Let's move on. Now, looking at the NASDAQ, you can see that all of our trade triangles are positive right here, and you can see the market's made new highs. What is also interesting is if you scope this down, is the fact that the RSI really hasn't done the similar pattern like here. So you could actually draw a trend line, or you could draw a line from the highs here like that. So prices have been going this way, but the RSI has really been going this way, which is not necessarily a good sign. So we think this last period here has really been on a laborious sort of up move. We think the high in the index is probably very close to it now. We don't see this market going over 4,400, and I'm going to show you the reason why. Let's just take everything off the screen, and we'll scope this down to a max, and we'll just go on a line chart. Easy to just click here, and we'll take all of our trade triangles off. Now, the key thing to remember looking at this really closely is you have this period here where the market breaks out, really there. If you measure from these points here to here and project it higher, it takes you up to 44, which is 4,400, I should say, which is very, very close to where we are right now. So I think we're very close to the tipping point. The other thing to look at in this market, in my opinion, is the interesting point with the RSI. You can see we're making new highs, but look at the RSI. It's going down. We're going up here, but we're going down there. That's normally not a good sign. So let's watch it, the 50 point again, that's a key area. Plus let's watch some of our weekly trade triangles as an early tip off on that period. So pretty much the same pattern in the S&P 500. You can see that we have a negative divergence on the RSI right here. It looks like it's just, I'm just going to scope this in right here. You can see that patterns here, we're going higher, yet we're going lower in. So this is going higher, and this is going lower. That's not what you want to see in a really true bull market. So I think we're very close to, again, a tipping point. Wait for the trade triangles, which are all green right now. Wait for the weekly to give you a first clue that things are changing. This is looking at gold. I'll get a little closer in on the gold. The gold market, I believe, is embarking on a multi-year bull market. I think we'll see the highs sometime perhaps in the first half of 2015. And the key levels here to watch, let's just get this close in. Key levels in my mind where we're going to see some first level of resistance is going to be right, well, we're already at it, but you can see these previous lows, which normally act as resistance. You can see we've sort of got there already. And this period right here, which is right around the 1400 level. We need to go over 1400 if we're going to see this market really truly take off. Once we're over 1400, we can see this is obviously a double bottom right here. And we can measure from the 12 to the 14, that's 200, and we can add from this level here, this 1400 level, plus 200, which takes us up to 1600, which is right here, and that coincides with the period back in the April period of 2013. So I think that's going to be the pattern. I think we see gold higher. I think there'll be a lot of movement out of different things, whether it's trust in stocks or whatever it might be, but the general trend for gold right now is positive. Longer term, we see it going higher. We're looking at energy now. Interesting on energy is the fact that we're back down on the RSI to a 50 line. This is where the support should come in right here at 50, and let's see if it holds. If it doesn't, then we'll see this market come down a little further, in my opinion. The other thing that we have on the market is the fact that we do have our trade triangles. If you put those in, it's plus 70. All the trade triangles are green, indicating that the trend is positive on the upside. So let's just put our dailies in, and you can see that is pretty much the case. Let's move on. We're looking at the euro-dollar relationship, the euro versus the US dollar, and you can see really for some time now we've just really been going sideways. If you look at a big sort of square, you can get a better picture, and that is really from here to here. It's just sort of like a big go-nothing type square between the 135 level and the 138 level. So I think for the time being, we want to watch that carefully, but longer term it looks like it favors the euro over the dollar, which is interesting. But the other thing to watch is right here too. If you want to see this 50 line, if you go below the 50 line, that will probably indicate to our weekly right here that we're going to see more pressure on this particular cross rate. Hey, I'm Adam Hewison. Thanks for stopping by. I hope you enjoyed this update. Lots of things to look at. Obviously, the Ukraine and no Ukraine, the markets are going to trade, and we have to be on the right side of those markets when and if they do turn. So have a great trading day, everyone.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.